and how to practice trading view. I also told you that the indicator is only for premium trading view users. But at the same time, it's not something that you need to use, right? Because literally, it's just like an extra confidence. It's not a strategy. It's not like every time you see price above value area high, just you're immediately selling, or below value area lows, you're immediately buying, right? But then according to the option market theory, it says that when price is above value area high or at value area high, you're anticipating what sells, and when price is below value area low or at value area low, you're anticipating what buys, right? Now, let me go straight to my trading view. By the way, I don't know how was the previous trading week for you guys, because okay, last week I took these were the 4 pairs I traded last week: EURCHF, NZDCAD, USDJPY, and AUDJPY. The EURCHF was a reclaimed block. This was a PY. The EURCHF was a reclaimed block around this area. This was the buy position I was on, and then targeting this internal high. It's still the same thing. Price was bullish, and it mitigated a demand level. This was the demand level that price was buying from. So it's just like the usual reclaimed blocks for continuation, right? Then price will mitigate it, and it continues to the upside. Reclaimed blocks for continuation, right? And then the reclaimed block had what its inducements, like everything just in line with the flow. And then the second one was NZDCAD, but then NZD card took me out. I continued selling. I think my stop loss was just immediately took my stop loss out and then immediately continued selling. It was something just like this. My stop loss was barely above this high, and then price swept and then started selling. So I was stopped out on this particular trade, although it came back for a sort of reclamation, which I was not involved in. It came back to use that level as a reclaim block, but then I was not able to catch that. Then the USD JPY, I took a buy position here. It was a pattern confirmation. If you look at what happened at this level here, if you look at what happened at this level, we had price initially mitigate.
Hi, Star. Your network is breaking.
My network is breaking. Is it? Can you hear me now? Can you hear me? I think it's the rain. Yeah. Let me see. Okay, Chibless, can you hear me?
I can hear you. I think it's his network.
Oh, okay. Just let me just make it the other focus. Let me know if my network is not or anything. Sorry. So I was saying for the AUDJPY, this was the initial mitigation that price did on the demand level, right? And then it came back again as per the first pattern confirmation. I told you demand zones for continuations. And what happened? We had our sweep of liquidity and all of that. But the major reason why I was skeptical about this zone was because of the fact that it was not well induced, right? Although it's pattern confirmation, I understand, and all of that, right? As per price is already mitigating or reacting from a first demand level. So this is just like a pattern continuation. The fact that there was no structural inducement that pulled back into 50% kind of made it of very low probability. So instead, I told you, when you have demand zones like this that you're unsure of, right? If you don't want to take risk on them, all you have to do is to wait for what they create for you. And of course, this pulled back to create what a sort of type B market structure, which in this case is actually a type A sell, because this was the break here, and then price pulled back and then broke out, right? So this was where I took my buy position from, targeted this internal high. It was almost one you should sit at. Because I remember that I took it on my 100K account, right? and then targeting this particular higher. This was the trade, as simple as this, right? It's still the same thing over and over again. And I also had a buy on AUD but that one missed entry. It didn't tag me in. Yeah, I was looking to buy at this level, or price didn't retrace back to this level, just started buying. So I missed out on this one. So it was basically one missed entry, one stop loss. That's the NZD card stop loss. This one just took me out, immediately took me out to start selling, right? And then two take profits on USDJPY and EURCHF. So just for trading opportunities, which was still okay. I told you there are some weeks you see like just two things to trade. There are some weeks you see four. There are some weeks you won't have them as overwhelming as up to six, right? But then your goal at the end of every week is to make sure that you only executed the quality trades, only the trades that meet with all of the criteria. If you look at the 4 POIs I showed you on each of these pairs, and you try to validate them in the 4 hours or use our trading checklist to validate them, so you realize that what all of them met with our trading criteria. Even this USD I kept on waiting for confirmation upon confirmation upon confirmation, right? This was the first notification when USD price started buying, but then I was looking for pattern confirmation here, but then it was not looking suitable enough, right? And then I said, okay, when price mitigates this, I'll go down in the 15 minutes and look for another pattern confirmation. But luckily, on the 1 hour, it printed something that is very tradable for me. And then I just executed just like that. So at every time, all you have to do is to watch. You need to be patient, learn to sit on your hands and wait for what the quality setups to play out. And I told you, you can also use the idea of correlation. The only reason why I was looking for a POI on AUD was because I saw a POI on USD JPY. I knew that, okay, since USD was buying, some of the players that have JPY as their cross currencies, you also would present buying opportunities. I told you, if it's CAD, the same thing, CHF, the same thing, most of the times, right? They're always moving in the same direction, so you can see multiple trading opportunities on each of them. Now back to what we're supposed to do today, which is what the second part of our time price opportunity. I told you guys already that the time price opportunity is like the first part of order flow. Order flow is divided into TPO. We have VWAP, and then the market profile, then there's what footprint, right? So this is like the most basic part, and I insisted that this can be very confusing for most people, especially for beginners. So I didn't want you thinking that this is a strategy. If it's something that you don't understand, then it's very okay to let it be, right? And continue with the technical analysis. Just like an extra validation for technical analysis. But it's, you understand, it's not a necessity, right? Now, if you go to, let me just pick one of these page. All right. So this is EURCHF, and this is the TPO indicator. Let's come on. All right. This is a TPO indicator. I already showed you guys the settings and all of that, right? Now, if you look at what I told you that every day you're going to be using the previous day's settings for the new day, which means that if you're trading on Tuesday, you're going to be using Monday's TPO vitals, that's Monday's value area high and value area low. If you're trading on Wednesday, you're going to be using yesterday's, which is what Tuesday's value area high and low as your considerations. If you're trading on Thursday, you're using Wednesdays. If you're trading on Friday, you're using Thursdays. And if you're trading on Monday, you're using what Friday's value area high and low, right? And then I mentioned that that is what we call this the single prints, right? Literally these things you see on purple lines, they're just used to indicate areas with smooth run when price is moving to a direction without interruption. You see what you know as imbalances in technical analysis. That is what they call single prints in order flow, right? You realize that most of the times that you see this purple line, it's what it's literally just indicating imbalances. But then on single prints, on order flow, this single prints have more power, right? There's a way that people trade them. I don't trade averages, whether technical analysis wise or order flow wise. I don't doesn't interest me. I don't think I'm satisfied with the way it's okay. Now for the POC, which is what the POC I told you that it means what the point of control. It is very simple. You see all these lines that are indicated in red, they are what? They are POCs. If you look very closely, you'll see POC here. And if you look very closely again, you see what POC here. Every day has its own value area high, its own value area low, its own what POC, which is what point of control. If you look very clearly again, there's what POC. So for every trading day, you see what's a POC, a value area high, and a value area low. So the POC just indicates that point in a day with the highest trading order, right? The highest trading volume or activity in a particular trading day. That is what the POC usually what indicates. Where people start a lot of order on, where people traded a lot from, where people, were buying and selling from. So that place with the highest volume or trading activity, it's what the POC indicates, right? And that's what makes it very powerful because the main importance of POC when it comes to order flow is the fact that when you have your point of interest resting on the point of control, you're sure that there is what an 80% or if not 90% chance that that point of interest will play out, right? Majority of times, 8 out of 10 times that you see your POC resting on your type A or type B trading setup, realize that particular setup is most likely going to play out for every time that you have POC resting on um, on the entry, right? I'm trying to look for an example in this pair. Let me see if I'm going to see something, right? Let's say you have your type A or your type B, and then you see what? You see price resting on that zone. But if you look at what happens here now, this is POC on this range. This is the previous day's POC on this range, right? This entire demand zone has this demand level here. And if you look, well, let me just put this off for a while so that you guys can see what I'm doing technically. All right, this is where the POC is. You can see the POC resting on the demand level. Let me put this off. All right, you can see something just like this, right? And then price comes what mitigates it and what plays out. Majority of times that you see a point of control resting on a valid demand zone or a valid supply zone, you are rest assured that prices were going to mitigate and flash to the upside or to the downside, so long as it's a valid setup, right? Once you say POC, you just look at it as a giveaway. Let me put it like that. Majority of the time, so if you go back to back pages, you will realize that for almost every time that you see POC on a valid demand and supply zone, like the resting in it, just like this, you can see how this is what how the POC is included in the POI, just like that. It has to be in the point of interest or point of area of concentration, right? Realize that once price mitigates something just like that, it just moves right in that direction. Okay. Now, the next one, which is what the value area high and the value area low. And these ones are the most important, right? Whatever happens in between the value area highs and the value area low is none of your business. Your business is with what the POC, the value area high and the value area low. Whatever happens inside, technically, sorry, in an order flow manner is what is not your concern. If you look at this, you realize that every trading day has its own value area high, point of control, and what value area low. And like I said, we're going to be working with the previous day's value area high and value area low. Although in some cases you can work with what the like 2 days before. Let's say on Thursday, sometimes Tuesday's value area high and low can be valid, right? For whatever you want to do on Thursday. But majority of the times to keep it very accurate and simple, it is what's the previous day's price action. All right. Now, if you look at something just like this, when it comes to order flow is not based on what has happened. Technical analysis, we're using our knowledge of history to execute trade. This has played out many times. This pattern has done this many times. And so, because I have an understanding that for every time that this and this and this and this happens, this is going to be the outcome. That is why, since I have seen this and this happen now, that is why I'm going to be executing like this. That is how technical analysis is about, right? Our knowledge of history, repeating patterns. But when it comes to order flow is not based on what has happened. It is based on what is happening. And that's why people majorly use it as confirmation. Like if you go to the footprint chart, right? Let's look at this. Let's look at something just like this. All right. If you look at something like this, sorry. If you look at something like this, you realize that it's the same candlesticks. But now, in between these candlesticks, you see actual data, number of people buying, number of orders resting on these candlesticks, how every candlestick closes. Like normally, if it's on the usual candlestick chart, you're going to be seeing what? You're going to be seeing just bearish and bullish candlesticks. But here you see the particular number that makes it what? Bearish. Okay, the data is minus 24. The next data is what? Negative, positive 104, like just like that. Like you're going to be seeing these things specifically. You're seeing what is happening, not what has happened. And that is why order flow is important. It is showing you what is happening at the moment, sorry, right? But then technical analysis is showing you what has happened. And that's why I said, to me, I feel like you can be very profitable with just technical analysis. If you're going to be using order flow, means what? Just you adding an extra care, right? And so it's not something very important. I keep on emphasizing for those of you that may not understand it so that you don't take it upon your head to think that that's the end of the trading career, right? Now, there's something called four lows and four highs, which are usually liquidity. I'll probably talk about that another time, right? But then you see these yellow lines, the ones up are what? Four highs. And then the ones down are what? Four lows. Something like this is a four low. Something like this is a four low, right? Something like this is a four high. Majority of the times, price takes them out as what? Liquidity. That's their significance there, right? And then I mentioned that when you're going to be taking these trades on TPO, you have to do that on what? On good market structures, like trending market structures, where price is pulling back, right? Where price is pulling back, not the ones that price is just going in one direction. You can't have BTC moving from 70K to 100K, and you're going to be looking for value area high to sell from. You understand? For something like that, that's not how it works. So it has to be on trading days. Now, for the TPO, let's say for something just like this, if you look at this now, I don't know why I feel like this is too dark, but then let's go. All right. Now, if you look at what happened for something just like this, is Friday's price action. So let me go to Thursdays. Now, if you see what happened then, price did what? Price went below. This was Wednesday, right? And then Wednesday's price action went below. This was Tuesday's value area low. This was Tuesday's what? Value area high. And I told you that when price goes above value area high, what does it do? What? It sells, right? And you can see the point at which price went above Tuesday's value area line. This is the line of value area line on Tuesday. So when price went above that value area high, what did it do? We witnessed what? Sales, massive sales to the downside, just like this. And these sales continued and went below Tuesday's value area low. Now, when price goes below value area low, I told you automatically you're flipping now from what? From selling to buying. Now, the thing is, it's not immediately price goes below value area low, you start looking for sales, for buys, sorry. Instead, you're looking at what? Where is the best possible zone that price can buy from? Do I have a good POI that can send price back up? I told you, right? Whatever thing you're doing with value area highs and lows, let's say that whatever rejections you're catching is on what your type A or your type B trading setup. If not, forget it. It has to be what on your training setups, a good demand zone, a good supply zone, just like that. Like you can see when Wednesday's price action went below what Tuesday's value area low. What happened? You ask yourself, where is price going to reject from now? What good demand zone is price going to buy back from? And if you look at what happened there, we actually had what a type B setup here. All right. If I put this thing up, I think it's going to be clearer. All right. This was where price actually works from after going below that value area low of Tuesday. When this price action did what? Went below value area low of Tuesday and did what? Came back to what? Mitigate this demand zone and was straight to take profit targets. Just like that. Like literally just like that. It has to be what? Your valid demand and supply zones that are sending what? Price back up. Right? Even if you look at the value area highs as well, right? When price went above, this was on Friday's price action. When Friday's price action went above Thursday's value area high, you can see it went above Thursday's value area high. What did it do? It came to mitigate this extreme and then did what? Started selling. Like it has to sell from the zone. And most of the time, some of the zones may not be high probability zones. All right. So what do? You ignore. As simple as that, you actually just ignore. All right. It is only when you see these things form in, or sorry, before valid zones. I mean zones that have met all of the criteria. That is when you execute. So you're not buying just because price is below value area low, and you're not selling just because price is what above value area high. Instead, you're buying because price has gone below value area low, and you have a valid area to buy from that you are anticipating that new day does what? Mitigate and buy from. And you're selling because price has gone above value area high and you have what? A zone that is valid enough above to do what? Send price what? Back down. As easy as that. That's how the TPO works. I told you it's like the simplest of all of these it's like the simplest of all of the parts of order flow, right? You still have the viewer, the footprint, and all of that. But this one is just as simple as this. Like if you look at what happened there now, price this was the new day's price action of Thursday, and this was Wednesday's value area low, right? And when price went below Wednesday's value area low, what did they do? It came what to mitigate this level and did what started buying. I told you it has to be what a valid level. So it's not like immediately it goes below the value area low, you start looking for where to buy from. Instead, you wait for it to do what? You wait for it to give you a proper zone, right? Wait for it to give you what a proper zone. Even the confirmation set, the confirmation when price went below value area low, all right? That's the pattern confirmation. Price went below what's value area low and then came towards mitigate this level, which was like confirmation level and did what bought to the upside. All right. So if you want to be profitable with this, you need to be very, very careful. All right. You can't afford to just be buying anywhere and anyhow. That's why I had to make sure that I took the technicals first and make sure that you guys started executing with the technicals first before I bring any of these things up. Right? Because it can get complicated, it can get confusing as well, right? And you can get distracted. Like if you look at what happened here now, this particular one went above what's the previous day's value area high. And then I told you when price goes above value area high, you're anticipating what sells. But then the sales are not immediate. You have to yourself, where is the best possible place that where the price can sell from? And if you look at here, we have what this particular type of type B setup, right? At this level, at this level, where price created something just like this, you respecting order flow, then you have your form of engagement. And what happens? Price comes, mitigates it, and what starts selling, just like that. All right. So it has to be what valid zones that you're using to catch this inverses. If it's not valid, just forget about it. Majorly, people use it for scalping. The price above value area high, they look for where to buy from, where to sell from, sorry. The price is below value area low, they look for where to buy from. As simple as that. It's not really so complicated. Right? It's when you get to the rest of them that it starts getting a bit overwhelming, but this one is not as straightforward as this. your attention. Whatever happens between value area high and low is not your business. The business is what happens when price breaks out from value area high or breaks out from what value area low, or when price is on and a level of what control. That's the point of control. When you have a POI, that's the POC is resting on. That becomes what very interesting. But that's just like the significance of the TPO when it comes to what order flow. All right. So you guys can go through it on your own to look at what price is doing, and you can backtest it and then see um you can backtest it and then see how it works for you. If it's something you want to incorporate into your trading life, that would be very interesting. All right. If it's something that you do not want as well, it's very okay as well. I told you, I can guarantee you that you can be very profitable without it. At the same time, it can improve your trading as well. Just depending, everything is subjective. All right. So this is where I'm going to stop. If you have any questions, please drop it in the questions of topic. As usual, I wish you guys a happy trading week. Don't forget to not just drop your trade ideas, but then if you started executing, don't forget to execute your trade ideas, because you cannot stay in the learning phase forever, right? At some point, you need to start taking actions. So if you've been dropping trade ideas and you think you've been able to have a sustainable win rate to an extent, even 60% is enough for you to start executing. All right, join your mates and figure your way as you move. I wish you guys the best of the new trading week. Take care of yourselves and see you guys again 9 p.m. on Saturday. My co-host, thank you so much.